Good morning, traders. Chris Buss here with Traders Profit Compass with another edition of Before the Bell for Wednesday, August 31st. Extremely late start for me, 7:23 a.m. as I'm starting the video. So if I'm getting out of the gates an hour late, that means most likely you're going to get this video an hour late. So I apologize for that. As always, if you're new, please run your player at 1.5x. Because of my late start, I'm going to try to do an express run. I know I've said that before, and the video ends up being 40 minutes, but I'm going to try to expedite that with just the high points today. So let's get to it. US dollar, still struggling with 109. I would just focus on that number for the next, well, till something happens, till we get a breakdown or a breakout. Right now it's just hovering. So there's definitely buying pressure, but we're at resistance. So we'll see if it can break through. TLT still trying to decide what it wants to do. Just trading in and around 113 for the last few days. You can see that there's resistance from the 8 EMA, and you've also got a lot of overhead resistance in the volume over price profile. So we'll see which way it wants to go. VIX, as we've been talking about, was up a little bit, I think. Oh, it was flat yesterday. Yeah, flat. But came down to 25, got up as high as almost 28, and then settled right back in the middle near 26. So I think the key ranges on the VIX are 25 and then resistance between 29 and 30. Going to skip over Bitcoin, jump into oil. Devastating day yesterday, off 5.5%. I see it's off 2.25% here this morning. I guess everybody's saying that the Iran, call it the Iran nuclear deal, but of course Iran has a lot of oil, so part of that deal is you get, you're welcomed back into the world markets, and so people are pricing in that that deal is going to be eminently signed here quickly, and that some new barrels will find the market. I have my doubts, not about the signing of the deal. I have no idea there, but the barrels that Iran have been producing have been finding the market, the black market, India, China, wherever they may go. I think the deal will, bring all that above board, which is probably a good thing as far as, knowing what production is happening and probably get a better read on markets. But I think the levels, if we were to get down into the 88s or retest this 85.36 level, I think that would be a good place to take a shot on the long side, because you would have a stop easily available close by, just under this 85.36. If you get stopped, you get stopped. But I think there's still going to be an upward bias on oil. Of course, that doesn't help our Valero, which were long. It took a beating yesterday. But for the longer term, I'd rather be bullish than bearish on oil, at least at this point. I think the most important thing for us in the next couple of days is our NIMO and NAMO oscillators that are now overextended, minus 83 on the NASDAQ and minus 70, or excuse me, minus 83 on the New York, and minus 70 on the NASDAQ. You can see they can push lower and have, but usually when you get down in this area, you're on borrowed time. I favor a bounce now. May not get it right away, but every time we get one of these extended readings and somehow allow ourselves to be convinced that it's different this time, it never is, right? We found that out back here. We just found that out here. We found out here. We found out here. So I'm favoring a kickback rally to relax these oscillators, and then we can position for the next move. And the thing I want to point out is on most of your charts, I think you'll find that price is on the wrong side if you're a bull. What do I mean by that? Well, here we got SPY below all the moving averages, below key resistance, RSI below 50, moving into bearish regime. PPO has rolled over and accelerating to the downside. And so if you're sitting here with the oscillators extended, you don't want to be sitting here loaded to the gills with shorts. Now, I'm not talking about like intraday, 5-minute chart type stuff. I'm talking about position trades with time, because those oscillators are going to snap back, and you don't want to be sitting here with, even a little simple kickback rally to 410 into the teeth of the declining moving averages, into the teeth of technical resistance. What you want to do is, if you got short on this break and have managed to, pile up some profits on the short side, make sure they're not paper profits. Make sure you take that to the bank. And depending on how nimble you want to be, one trader may say, I'm gonna position for a bounce here of 10 or 12 points. Or another guy might say, now that we're on the wrong side of the charts, I want to just play short plays. I'll wait for that kickback rally into the teeth of resistance. I will try to get an entry either right in by the 50 EMA, or into the teeth of this resistance. I think you would be pretty confident. I think that would be a very high probability short, to get short on a kickback to the breakdown. Then you got all this resistance overhead on your side, and then you can position for the next leg down. And you know what? If you get stopped out, you get stopped out, but that's trading. I think that's better than trying to stay short down here with the oscillators extended and then have to suffer through that kickback rally and, have a lot of your profits disintegrate. I think here yesterday we had a little bit of a positive open, then it fell apart. Came down right here to this 396 level, which we had on the chart, and really that was the extent of the selling. I think you can stay long against 396 and look for something like 401, 402. And if you got a breakout there, then that would open up for a run to 407, which I believe is where the 50-day is. But that's all, tactical type trading. What would change my mind, at least today, if there was a break of 396 and then you moved into this gap. So on your charts, make sure you got these gaps marked, and be ready if there's some kind of a move down. And if you do get long, just put your stop in place in case it peters out. Now, I noticed we were up a little bit on futures. I didn't call it out. But, if we get up here and you get a break above, 401.50, 402, and you get the sense that it's going to stick, like a reversal day, then you can get long against that level, put a little stop below, and see if you can get a push by the end of the day up towards the 50 at 407, and that would be a nice little trade for you. Same kind of comments here on the Qs. Price below all the moving averages, 200 simple, 200 exponential. The 8-day has crossed below the 20-day. Remember, that's always bearish, right? When you have a faster moving average move below a slower moving average, that's a bear type move. And now price is below the 50, below key resistance, and below the uptrend line. So I think today you can use, let's get a closer look at it here. You can use 300 as a pivot. Notice that you've got a nice size gap right here starting at 298.50. I would certainly have that alarmed. Yesterday we probed that gap, but it held. So now what's in front of the Qs, at least on the shorter time frames, is to bounce here, reclaim this 305 level, and then get back above trend, get back above 308. And then what you want to do, let's look at where the 50 is. Yeah, the 50 is not really in play up until almost 311. So this may have some really right in here at this downtrend line. 311 is where the 50 comes in. So there's potentially, an $11 type bounce into the 50 and this downtrend line and these high volume over price bars. I think that would be a nice place to try to reshort the Qs right into that level. And then if you get stopped, you get stopped. The next bounce target would be up into 317. IWM gave up the ghost yesterday. Why? Because it was price was sitting above the high volume bar here as support and sitting on the 50 EMA as support, and it broke. So now IWM also is below all the moving averages, lost uptrend support, downtrend support right here at this line, and now it's below everything. So I think your next critical level is 183. Down in here below this little 60-minute trend line. If it recovers 185, I think it can get to 187, 188. If it gets through that, 190. And if it got up that high, I would be trying a short right there at 190. So I would have that level marked if you're interested in a re-short of that. Meta. Remember way back when, like 4 days ago, we were talking about watch 172 like a hawk, because if you went back into this big trading range, your target automatically becomes the bottom of the range at 155. And there's probably a few of you out there said, "Oh man, that's a long ways away. That's like $17 away." And lo and behold, we're basically there. So, take those rules to heart in your technical analysis. It happened here, it happened here, it happened here, and so now we're back here at the lows against support at 155. And remember, support is support until and unless broken. So you don't want to be short Facebook here. You want to be long. Why? Because you're at support. So you can be long against the lows at 155, and you're hoping for a kickback rally into the teeth of some overhead resistance. And if the rally extends, you could round trip it all the way back to 172 at the top of the range. So that's a really nice example of a range trade. It's an example of a bull trap, and you had the exact same thing happen a few weeks prior. Bull trap, fail, bottom, another bull trap, fail, bottom. So those are, I make a joke in the trading room when I put charts like this up with a little comment, "That's why I draw the lines." Well, that's why you draw the lines, so you know where these levels are, and you can set in your mind where the expectation is, what you're shooting for. So really, really helpful. Apple had a little kickback rally into this 162, came down, made a run inside this gap. I was short heading into this gap, and I got out of it eventually. Didn't make as much as I wanted, but I was thinking, man, with this selling pressure, this thing's got to close. This thing's got to close to 157. Never did it. Little higher volume price bar here maybe came in as support. But anyhow, now you've got a real clear line right at the top of the gap, 159.25. You can be long above that. See if you can get a kickback all the way up to 162.5. If you get a peak above, then fail. Then you get short again at 159.25, figuring on this gap will close on the second try. Tesla offered some nice trading ops the last couple of days. We had focused on this 287. We got a breakdown the day before and then a kickback rally right into 287. If you're a Tesla guy and you were actively trading and you saw that run into big resistance, right? Support, support, support. Big resistance here. Perfect entry for short. Congrats if you got that. It fell away quickly. And then in the afternoon, I did not get this, but I got this one. I got the break of 280, and it came right into our pre-identified level here at 272.5, and had a nice bar to come up. Now, I covered that, but if you see Tesla, number one, if it breaks 280 to the upside, recovering that key level, you can be long for 287. If it comes up to any point in here, stalls and starts to roll over, then you can be short for a move back down the other way. So, make a long story short, these levels worked really, really well yesterday. And if you had got them, congrats to you. Microsoft down a little bit. Looked pretty scary on the first bar of the day, but then just kind of faded. I think 264 is your pivot today. If you can reclaim that, I think you can be long Microsoft at 264, and you're looking for 270, possibly something like 273 at the downtrend line, depending on when it gets there. Take note of the gap. That's a big one. That's a $7 gap. You certainly want to get involved at that point. On the downside, that would certainly be worthwhile to have a try there. Amazon. Yesterday we talked about this kickback rally up to 132, and we actually got that in the pre-market. Almost got there, and then fell away. So that was a really nice trade. Now what I have done is put this line in here at 127.50 because obviously there was some support there. Spent quite a number of hours toggling between 127.50 and 128. Really didn't do anything until it finally lifted. Now today, if you can recapture this 129.50, then you've got a chance for 132 and a half, 134 type bounce zone, and then you can see if it stalls or if it breaks out. But eventually, this gap is going to fill and come down to 122. Google, very much the same as we discussed on Meta. We have been focused on this 118.50. We said you do not want to go back inside 118.50. Otherwise, just like Meta, the target's the bottom of the box. And so here we are, $10 lower with a gap to fill, which would take us back down to the bottom of the box. Now, you can tell here multiple touches of the top of the gap. That's fine. Have a little kickback rally into 111 or 113 and a half, and then roll over, fill that gap, and then there'll be big decisions to be made down towards 105. Netflix. I was kind of surprised with this one. I wasn't watching it closely, but some guys in the room were. It lost its 222.50, but didn't just fall apart. I thought it would. So right here, I think the pivot remains 222.50. If you got short there, I think you can, stay short. I don't think you need to, cover for a $2 gain. But if you get a break back above 222.50, then I would cover it and see what happens on any kind of a bounce. But as it stands now, the door is open for a move down towards, 213, 212, right in that area. Semiconductors. Big liquidation here. Had some flat flag action. Broke. Made a run towards the bottom of the gap here at 213.20. What was the low? 213.75. I was in this one, but I think greed got the better part of me. I didn't cover that at the lows. I covered it, back up in here somewhere. But a lot of times, at least when you see that first low get bought, and then the next low get bought at the same area, you can tell that the bulls have run out of, the bears have run out of selling power, even though they fell a little bit shy of the complete gap fill. They were 50 cents shy. I mean, that's good enough. Now, will it probably come up here, encounter some trouble and roll back over and fill it all the way? Probably. But if you're a short-term trader, you don't want to wait for that. You want to, pick it off right at support. And, I failed to do that. I thought it was just going to, come down and fill that gap completely, but didn't happen. So today, I think a real important level is this 218.50. If you can break above that, then I think you can get up into 222 and potentially even 225 back where the old gap was. So let's wrap it up there. A lot faster today than usual because I'm running late. I want to get this thing out to you in time to at least double check your levels. Remember, those oscillators are stretched. I wouldn't want to see you go out on a limb with a ton of shorts, hoping those oscillators go to minus 90. It may happen, but the odds are on some type of a relief rally. And then I think that would offer a much better risk-reward trade if you wanted to lay out some shorts back at higher levels. So let's wrap it up there. Hope you guys have a good day of trading. This has been Chris Buss with Traders Profit Compass. Talk to you next time.